Hello there, Total Market Traders, and welcome back to our weekly update. So this is the feature in which we do a slight recap and then we look ahead to see what we can expect in terms of opportunities and possibly fundamental data points that can have an impact on price action, and also decide whether we actually go into and basically pull the trigger on those opportunities. So looking ahead, again, we always start out with the US dollar index. That's one of the major currencies. So looking at it right now, we were expecting a decline. However, to be honest, we were expecting this to actually go into a much deeper pullback below the 50 EMA before actually making any sort of retraces. However, since that didn't happen, we might see the 97.50 level of the XY become resistance once again. So we have our first early clue there, which is a quite a rejection candle that could be ending up as a double top, and if that's the case, we will see the dollar index coming down, pushing up currencies, other major currencies in the meantime. So if we look at euro dollar, it's the exact opposite on the weekly chart that we can see on the DXY. So you can see it here. I do have an alert on the euro dollar at the 113.40 level, but it's not really to actually get into a long trade. It's for me to have an alert as soon as the dollar index or the euro dollar itself, due to the dollar index, basically breaks out and starts trending or starts having some sort of momentum. So while we can't really rule out a possible opportunity on the euro, or the dollar itself, when we pair it up with other pairs and other currencies, the idea is that we need to wait for extra confirmation. So one confirmation in this case would be the daily chart, which would show a possible break of the 50 EMA, or even intraday 4-hour, 1-hour higher lows, clear higher highs and higher lows that would form within the price action. Now, one very good example of this, where again traders are lured into taking positions, is something like the euro and the British pound. So again, you can see here how a possible support can form at around the 87 level, and we also have a pin bar just like on the euro dollar, with the euro pushing above higher. So this could basically be a buy signal. However, looking at the weekly, we can quickly disqualify that by seeing clear rejection of the highs. So it is by no means a clear signal. Double bottom is something that can occur here as well. So when you have mixed signals, when you have as much going for a short trade in confidence levels such as for a long one, it's just better to stay out. Another interesting one in this case is the pound dollar, similar with the dollar weakness now and the pin bar on the dollar index. We can see the pound now showing a head and shoulders pattern. So this is the inverse head and shoulders pattern. This is the head, right shoulder, left shoulder, and so we can look at this as a possible opportunity as well. But again, as I said, the higher highs need to be there and extra confirmation on multiple time frames needs to occur. Not to mention, the pound dollar is susceptible to fundamentals right now, as we have basically 6 weeks left until the official deadline of the UK exiting the EU, and still there's no end in sight of what actually will occur: a no deal Brexit, one with the deal, or even a basically the government going and saying that they want to prolong the time of the Brexit, so everything will be pushed ahead, and even a second referendum has been in talks. There's no point in going and basically trying to make up what the result is, because no one really knows what the result will be. The people who are actually dealing with how the result will be, they don't know what the result will be, so it is futile to just go and try and trade based on what a possible result could be and how would traders and the market react to it. So it's just better to basically be the observer and let price action and things unfold naturally. And then once there's clarity instead of uncertainty, that's when we should look at possible opportunities as soon as technicals align as well. Now, we have the technicals here, but the fundamentals are not fully there. That doesn't mean that you cannot take a trade, it's just you have to be extra cautious with extra risk management. One other thing is that you see all these ads around which talk about trade the uncertainty, because with the headlines being uncertainty left and right from the US and from Trump and the China and trade and all of these uncertainty type headlines make for a risky trade. But brokers are now want to get in on that, and basically they market the fact that you should trade the uncertainty. Well, really, you shouldn't trade the uncertainty, because uncertainty is always a temporary action, and so you should wait until something new comes around and shows you clarity within the uncertainty. So if something is uncertain, it just means that there's not enough probability to trade it. That's all it means, and with not enough probability, there's no point in getting into a position. So moving on, a couple other pairs that we can look at. Another one is a dollar Canadian, which is again a very good example of again a inverse head and shoulders, which showed a clear candle for a possible upside, but then the 50 EMA rejected once again. It's really sideways. There's not a lot to do with this until we don't see further price action development. Now I want to move on to crosses instead of the dollar in this point, and Euro yen is something that I really like. So we've had this, the Japanese yen is basically on the weaker side, and the reason we know this is because if you look at all the yen crosses, you look at dollar yen, even when the dollar has been selling off a bit, the yen still managed to be weaker and dollar yen went up. So you look at Euro yen, and what you can see, similar scenario, kept the trend line, held on to support, and we see some higher lows, which means that again this 50 EMA will be quite key. As soon as we have a break above that, we can look for possible trades. So Euro yen, for instance, is a good one. Pound yen is another one that's actually even better than the Euro yen, but again it has the pound factor in it, which breeds a bit of uncertainty there. However, it still looks to be a good technical trade, especially if you look on the weekly as well. We have a clear support, and all that we need to really anticipate is that the no matter what happens with the pound, the yen will be weaker, which is again, there's no real way to know that. But for intraday trades, where we don't hold for too long and we look at our calendar to see what kind of risk events are ahead, we could trade this as well based on a higher low. And another cross is the Canadian Swiss, which actually I had a trade on. However, it was only an intraday one. I didn't roll it into a longer term trade simply because it failed to accelerate to the downside. So we have a clear trend line, nice lower highs, daily looks quite good, weekly looks even better, but it failed to break that 50 EMA, and this is why it only was a intraday trade instead of something that is something that pulled back further down to the 0.74 level or so. So that's basically what we can see. Another really good, interesting fundamental breakdown is on the Japanese yen. And the reason why the Japanese yen is about to basically be weaker has to do with the fact that we can see some data coming out this week. And it says here, I'm just paraphrasing, that we have GDP growth numbers coming out of the Japanese economy, and depending on what the GDP number will be, that's when we'll know for sure whether we'll see the yen weakening further or not, as well as inflation, manufacturing, and so on and so forth. So all of these have to be looked out for, not to mention the FOMC meeting on the dollar and from the US, but that's again not something that I would trade, not something that I would look at. I would trade the aftermath once the volatility shows me any clear direction based on these news and risk events. And that is basically what we are looking for next week and this week. And I shall see you guys later. Have a good trading week.